Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen, his website, thegoldanoilguy.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
The equity markets in both Canada and the U.S. continue to climb. We have a statement from the IMF today warning both investors and policymakers against complacency. Is what they're talking about people should be wary that the stock market is still climbing in a time that traditionally we might see a correction?
Yeah, investors really, they're not all that afraid that the equities market is going to fall. I do feel as though it could have a very sharp collapse at any moment. October is typically a very poor month for performance for U.S. equities, and U.S. equities are bucking the trend this year. They continue to push up higher and higher and get overextended to the upside. They have reached kind of a critical level on the SP 500 where they kind of pushed up today and hit a measured move, which is a level that if it tags it, we could see price pull back from here. And we started to see a little bit of fear creep into the market the last 2 days with the VIX jumping up. We've seen precious metals and utilities start to firm up. So there is money slowly getting a little bit spooked that we're a little overextended in equities and we could see a pullback. But, the trend continues to be up and it's grinding higher. We will have a strong correction. The question is when, and things are slowly getting to that point. I thought it was going to probably happen about 2 weeks ago, but the market kind of rejuvenated itself. It's had a nice week and a half rally here, and it's kind of more or less moved up to the next kind of level where we could see resistance. The NASDAQ is hitting a critical price resistance. The S&P has hit those levels. The safe havens are all down at critical support, long-term support zones, and showing signs of life. We've actually had very nice pop in the safe haven. So I think we're really close. We finally are actually seeing downward trends in the safe havens be broken to start kind of a basing formation or upward trend. And the equities market, it has yet to show a sign of topping, but it's trading at a resistance zone where we'll probably start to see some sellers move into the market here very shortly.
What are the safe havens?
Well, the safe havens typically we see money kind of move into utilities, because a lot of people get into the high beta stocks, they get into tech, and they get into whatever the hot sectors are. But when things get overextended, they want to move to stocks or companies that have that are very stable no matter what happens. And utilities are one of those. Everyone needs water, hydro, gas, all those things. So people rotate to those utilities, and they start to outperform while the rest of the market goes down. And utilities typically pay dividends as well. So it's kind of a nice, comfortable, safe play. You're in equities. You're in the safest portion of the equities, and it pays a dividend. So that's where money likes to go. The more speculative money moves into precious metals like gold, silver, and miners, and all of those have had a really nice pop to the upside. And a good chunk of that is simply, I think there's a lot of fear kind of creeping in with more or less U.S. dollars at short-term resistance. Looks like it's about to sell down, move lower, which will help precious metals. But again, these safe haven plays are kind of a hedge against falling stock markets and falling currencies as well.
Is one of the reasons that people don't go into them when equities are rising is that it's not as much of a return as you might get from a hot high-tech stock?
Right. Well, yeah, depending on how you look at it, high-tech stocks are usually a high beta. So that means if the SP 500 moves up 1%, those tech stocks or small cap stocks that are fast moving, they'll move like a 3 beta. So SP 500 moves up 1%, those stocks move 3% or 6%. They can move a lot faster. And money, it's always kind of a balancing act. Money kind of shifts from those risky stocks, and then they might kind of flow over to more of the larger cap stocks as they get a little more scared. And then eventually, as investors become even more scared, they move to utilities and into precious metals. So it's kind of like a school of fish slowly moving, into three different categories, whether they're really high risk small cap stocks like the Russell 2000, tech stocks, things like that. And then they kind of shift to larger cap and eventually to the safe haven. So it's just trying to time those. And we're starting to see that school of fish kind of shifting into the safe havens now. We've actually got some upward momentum in the safe havens. And the equities markets, they haven't rolled over yet, but they're at this level where we should see that school of fish kind of really leave the equities market, and we should see the fear index, the VIX, spike up, and money will flee to the safe haven plays.
We'll have more with Chris Vermeulen right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test the numerous targets located by recent groundwork will commence later this year. Please visit our website at rmroyalty.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, Walmart bought back $20 billion of their own shares. What's happening there, and why would they do that, do you think?
Yeah, well, it's kind of been the story for a long time. We've been seeing for the last several years companies doing share buybacks. And, of course, the one thing it does is boost share prices, fewer shares in the market, which jacks up the earnings ratio, and, of course, price rallies. And that's what we've seen really in the last 2 or 3 days here, or last 2 weeks. We've seen Walmart shares take off. Today, the largest, with about a 5.5% move with the news that they're buying back all those shares. And it's just it's a big game. It's a shareholder game kind of strategy to boost share price, and it works. And that's what we're seeing today is a big pop in Walmart shares, and they're probably trying to move the shares to new highs, obviously.
What's the strategy for a company to do it besides raising the share price? Does this give the CEO a big bonus if his shares go up a large amount?
Yeah, typically there's performance bonuses tied in there. So obviously CEOs get in there, they want to clean house, streamline, get the share price, add value to the the company, and they can do that by obviously getting a certain level of share price. And it's a very, if you've got the cash, which Walmart does, it's a very easy strategy to jack up the share price without having to do a whole lot of anything but buy back a bunch of your shares. So it's definitely a bonus strategy for CEOs to look really good on paper, and it's kind of an easy play, in my opinion, going forward for them to get the price higher.
Do people feel this is an outright manipulation and maybe or should be outlawed like it was up until 1972?
I don't know how it should be taken, to be honest. It seems like, ever since I started trading, it's happened, so it's kind of the norm. And, it's a bullish sign for the stock. If they're buying back shares, they've got lots of cash, they're reducing the shares outstanding and thus moving the price higher. So I don't know if it needs to be outlawed, but it is definitely manipulation. And it moves the price with, writing a simple press release and hitting the button. Boom, you can jack your share price up billions and billions of value with, $100 press release, and then you just have to go out and buy your shares. So it is in some way manipulation, and it's just part of the game. I'm used to it. It's just the way it is, and you kind of want to be part of those companies during a bull market that are going to have the cash that are talking about doing share buybacks, because it is a strong, a strong sign for the company or the share price.
We'll have more with Chris Vermeulen right after this.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Chris Vermeulen. Chris, the IMF now has changed its economic outlook for Canada. It says instead of 2.5% growth this year, Canada can expect 3% growth. Do you think those numbers are accurate?
I don't know. It could be. We've got a fairly weak dollar, so it definitely jacks up the amount of product we can export. So that could be in line. That's a good sign. We need that. Higher the better. So let's hope it's true.
The IMF also today warned investors and policymakers against complacency. Are people complacent and think things will continue as usual, or the way they have over the last 8-9 years now?
Yeah, and that kind of across the board, I think the VIX, the volatility index, really shows what investor sentiment. We're hitting record lows, or maybe not record lows, but we're hitting multi-year lows we haven't seen since 2007. With investor sentiment, there's very little to no fear in the market. The average investor just continues to kind of, do their thing, buying properties, buying investments, buying stocks at these premium prices. And, eventually when the whole herd, when no one's afraid of the markets falling, that's usually the sign when the top comes and catches the majority off guard. So, I think they are complacent, and I think there's going to be a rude awakening. The question is, when does it start? Looking at commodities, Toronto Stock Exchange, with the strong performance it's had over the last month and a half, all the signs are there that the equities market is topping. Commodities are bottoming, and that's usually a sign that the equities markets are about to go soft, and things are going to get ugly, I think, here for 2018.
We keep getting that warning. It's happened now, I guess, for about the last month and a half, but somehow people aren't nervous. Now, is it because they're trading themselves, or they have their advisors who are saying, no, don't bail now, I still think it'll go higher? What's the factor here? Or has the smart money already bailed out very quietly so not to cause a panic?
I think a lot of big money is moving out of the market, but I still, we haven't seen huge amounts move out yet. We haven't seen those. We did see some of them back last year. It looked like the equities market was on the verge of a major breakdown last year, and then Trump got into place. And during 2015 and 16, there were huge bouts of massive distribution selling. So maybe a lot of that money that got out hasn't come back in. But either way, we haven't seen those huge hits in the market with massive selling volume and kind of knocking the market down and kind of waking it up. So we haven't seen that yet, but we're very, very close, I think, to seeing some of those take place. And once they start, I think that's going to be the tipping point, because the other asset classes are starting to shift already ahead of the equities market, and they usually do shift before the U.S. equities. So we're on that verge. Again, these are major multi-year trends. We're going from 2009 to 2018. This is a huge bull market run, and these don't turn over in a month or two. They take, 4, 6, 8, 12 months for the market to put in a true top. So even if the markets do top out in the next month or so, or early in 2018, the bear market probably won't be confirmed, because you need to break certain levels for several months later in 2018 is when the bear market would start, and then could continue for a long time after that.
Also, with government policies, we now see the Trudeau government wants to increase taxes on small business. It now wants to take away employee discounts. So if you make minimum wage but had the right to buy goods at the store you worked in, well, at a discount, they want to take that away. So they're starting to raise taxes, perhaps on people who can afford them the least. In the U.S., Trump is talking about reducing taxes, but most of his tax reduction plan is for billionaires who already are sitting on top of stacks of cash and not spending it. So how is that going to stimulate the economy? Is there disappointments here about tax policy on both sides of the border?
Yeah, I think there is, especially being Canadian myself. The Canadian new policies they're putting in place is unbelievable. We're already taxed at a very high level, and they already make it near impossible to run a successful small business because they just nail you to death with all kinds of policies and taxes. And here they want to raise even more. They want to now hammer your employees. And in Ontario, where we are, they just raised the minimum wage 30% overnight. So all those companies, those small companies that have a ton of minimum wage salary people, minimum wage, those companies are going to struggle to make money. They are now paying 30 to 33% more per employee per hour for these companies. So it's really going to put a real damper on profits for small businesses in Ontario. And, all they do is the government just is constantly, trying to take down the small businesses, and it's extremely frustrating.
The Bank of Canada said it was mystified by the lack of new business creation in the country. Perhaps they should take a look at the government's policies and end that mystery?
Yeah, no kidding. It's they're terrible. They're out to kill. They're not out to help, that's for sure.
And Finance Minister Bill Morneau has said there will be no unintended consequences from his government's new tax policies. Well, did they think that minimum wage workers would be better off if they were taxed on, say, they get a free T-shirt for working at that company? Yeah,
exactly. I just find it amazing that there's unions, massive unions in the United States and Canada that fight for 0.5%, a 1%, 2% raise in salary. We're talking cents in a lot of cases here. And the government just goes and slams everyone with a 30% boost in salary. Obviously, it's great for minimum wage people, and for sure, minimum wage, it's not a ton of money, but I mean that is a huge jump versus huge corporations that spend millions and millions of dollars a year to squeak out a 1% raise out of a company. Yet the government can put their foot down and completely catch a major company off guard who's got thousands of employees at minimum wage is now going to have to restructure their business and probably cut jobs and create, it's going to really throw a wrench into how the business has to be run in order to stay profitable.
Chris, always fun talking with you.
Hey, thanks, Jim. Always a pleasure.
My guest has been Chris Vermeulen, his website, thegoldandOilGuy.com. If you have any questions for Chris or our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.